We know what is interest due and we know what is the depreciation. So that interest and depreciation is an expense for the hire purchaser. So that has to be transferred to profit and loss account. So depreciation has to be calculated in written down value method. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. Today we are in the second session of Unit 3, that is hire purchase. Now what do I mean by hire purchase? So in a previous session we have learned the meaning of hire purchase system. So here there are two parties, hire seller as well as hire purchaser. So hire seller is having some asset or goods that will be transferred to the hire purchaser, and hire purchaser will take that goods and on the condition that the payment will be made in the form of installment along with interest. So on the date when the hire purchaser receive that goods, he will make some payment which is known as what? Down payment. And the agreement between the hire seller as well as hire purchaser is known as hire purchase agreement. Now my dear students, now we shall quickly recall what we have discussed in a previous session. So in a previous session I have covered this topic, accounting for hire purchase system. Just now I have told you the meaning of hire purchase system. Next, conditions under hire purchase system. So what are the conditions that has to be taken into consideration during this hire purchase system? So as I told you, here the payment is made in the form of installment, and on the date of receiving the goods by the hire purchaser, so he will make some amount which is known as down payment. So there are certain conditions that has to be followed in hire purchase agreement, which we have discussed in a previous session. Next, terms used in hire purchase transaction. So there are various new terms that has been used in hire purchase transaction. So it may be hire seller, hire purchaser, down payment, cash price. So there are various terms what we have discussed in a previous session. Next, difference between sale and hire purchase. So there is a lot of difference between sale and hire purchase. So we have discussed in a previous session. In today's session, we shall continue with new topic. I have told you I am going to discuss about journal entries in the books of hire purchaser during this hire purchase agreement. First, let us see the format of journal entries. Next, we shall go through a problem so that you can clearly understand how the journal entries has to be prepared. And my dear students, this is a very important question from the examination point of view, where you can expect 15 marks for this question. Now go through the format here. So this is journal entries in the books of hire purchaser. So I have told you there are two parties, hire seller as well as hire purchaser. So today we are going to prepare journal entries in the books of hire purchaser. Now think yourself that you are a hire purchaser. Okay, now you are a hire purchaser. Now what is your first entry? That is on the date of receiving the goods. So I have told you, so it is an agreement between the hire seller as well as hire purchaser. For example, now there are two parties, M and N, and M is a seller and N is a hire purchaser. Now we are going to prepare books, or we are going to prepare journal entries in the books of hire purchaser. Okay, now think yourself you are a hire purchaser. Now, your hire seller transfers the goods to or assets to hire purchaser. Now, what the hire purchaser will do, on the date of receiving the goods, he will make some percentage of the value of goods. He will make the payment, which is known as what? Down payment. So, here N makes payment to M. That is down payment. After making the down payment, the rest amount will be transferred to the hire seller in the form of installment along with interest. So this is only you have to remember here. Now we shall go on through the journal entries in the books of hire purchaser. Now what is your first journal entry? So that is in the books of hire purchaser. Now the hire purchaser is receiving the goods, right? So what is the entry? Asset account data to hire seller account. Now hire purchaser is receiving the goods, so debit asset account. So it may be car or it may be furniture, so any of the asset. which is purchased on hire purchase agreement. Now, we are going to prepare books, or we are going to prepare journal entries in the books of hire purchaser. So, here hire purchaser is receiving the goods. So, asset account data to hire seller account. From whom we are receiving the goods? From hire seller. That is, here hire seller is M. Okay. So, your entry will be asset account data to hire seller account, and your narration being asset purchased on hire purchase system. So, this entry is for hire purchase. Here, hire purchaser is going to receive the goods. So, that is the first journal entry for receiving the goods. And the second entry is that, so I have told you on the date of purchasing that goods or receiving the goods, hire purchaser will make some payment which is known as down payment. So for that we have to write the entry. So this all happens on the date of receiving the goods. So he has received the asset. At the same time he makes the payment to the hire seller, that is down payment. So what is the entry? Hire seller account data to bank account. Why you are debiting hire seller? Because we are making payment to hire seller. So debit hire seller. What goes out of the organization or what goes out from the hire purchaser, that is bank or cash. So hire seller account data to bank account being the down payment made. So this is the second entry. So first entry for receiving the goods, second entry is for making the down payment. Next, what happens? I have told you the remaining amount will be made or will be paid to the hire seller in the form of installment along with interest. So your third entry is for interest due. So your entry will be interest account data to hire seller account. So interest has to be paid to whom? Hire seller. So entry will be interest account data to hire seller account. So this is for being the first year in interest due. So this is for first year interest due. And the next one is we have to pay the installment. So we know what is the interest due. Along with interest, we have to make the installment, right? So here installment is equal to principal plus interest. So here principal amount plus interest. So that is what the total of installment. So we know what is the interest due. Next entry is for installment paid. Now, what is the entry for whom we are paying installment? For hire seller. So, hire seller account data to bank account. So, we are making payment to hire seller receiving that amount, and from hire purchaser what goes out? Cash or bank goes out. So, hire seller account data to bank account being the first year installment paid. So, these are the 4 entries. Let's see what are the next entry that has to be recorded in the first year. Next is, now, the hire purchaser is having the goods or asset, right? So, it leads to depreciation. So, we have to charge depreciation on that particular asset. So, charging depreciation. So, depreciation account data to asset account. So, why we are debiting depreciation? Because it is an expense. And what is asset? So, we are charging depreciation on asset, right? So, depreciation account data to asset account being depreciation charged. Next, we know what is interest due and we know what is the depreciation. So, that interest and depreciation is an expense for the hire purchaser. So, that has to be transferred to profit and loss account. Now, if you see interest, we have debited interest. In the same way, we have debited depreciation. Now, interest and depreciation has to be transferred to profit and loss account. So, what you have to do? Earlier, interest and depreciation was debited. Now, we are going to transfer. So, credit interest and depreciation and transfer to profit and loss account. So, your entry will be profit and loss account data to interest account to depreciation account. So, this 6 entries was relating to first year. So, in first year, what are the entries you have to make? First, for receiving the goods or receiving the asset. Second entry is for making down payment. Third entry is for interest due. Next, fourth entry is for installment paid. And fifth entry is for depreciation, that is charging depreciation. Sixth entry is transferring depreciation and interest to profit and loss account. So, these are the 6 entries that has to be recorded in the first year. Clear? So, this 6 entry will be only in first year. Now come to the second year. Second year, again we are not going to purchase that asset. So leave that entry, and your second entry is what? For down payment. So you have already made that down payment in the first year itself. So leave that first two entries. Your third entry is for what? Interest due. So your entry will be same, interest account data to hire seller account, and the narration being the second year interest due. So being the second year interest due. So this is the second year first entry. Second year, you are not going to record for asset purchased as well as down payment. You will start with interest due. So entry will be interest account data to hire seller account. Next entry is for what? Installment paid. So hire seller account data to bank account being second year installment paid. And the third entry is for depreciation, that is charging depreciation. Depreciation account data to asset account being depreciation charged. Next, your fourth entry will be transfer depreciation as well as interest to profit and loss account. So profit and loss account data to interest account to depreciation account. So this entry, so from 7th entry to 10th entry will be for second year. Next, come to the third year. Here also there is no down payment, there is no receiving of asset because it has already done in the first year. So start recording the entry from interest due. So first entry is for interest due, that is interest account data to hire seller account being the third year interest due. Next, for installment paid, hire seller account data to bank account, so being third year installment paid. Next, for charging depreciation, depreciation account data to asset account being depreciation charged. Next, for fourth entry is what? That is transfer interest as well as depreciation to profit and loss account. So your entry will be profit and loss account data to interest account to depreciation account being interest and depreciation transfer to profit and loss account. So this was the entry of third year. Suppose in the fourth year also, if the payment is made in 4 installments, so this was a format where payment is made in 3 installments. Suppose if the payment is made in 4 installments, then your fourth year first entry will be for interest due, next installment paid, next depreciation charged, next transfer interest as well as depreciation to profit and loss account. In the same way, if it is 5th installment, it goes on continuing like that. So in your first year, there is 6 entry, rest years, it contains only 4 entries. Hope you are clear with the format. Now, we shall go through a problem so that you can clearly understand how we are going to prepare journal entries in the books of hire purchaser. Now, go through the problem here. Durga Travels Limited purchased 4 motor cars. So, how much they have purchased? 4 motor cars costing rupees 2,75,000 each from Tata Company Limited. So here there are 2 parties, Durga Travels Limited and Tata Company Limited. Now who purchased the car? Durga Travels Limited. So here Durga Travels Limited is a hire purchaser. Then from whom they have purchased? From Tata Company Limited. So they are hire seller. Now clear about who is hire purchaser and who is hire seller. First you have to identify who is hire purchaser as well as who is hire seller. Because sometimes they will ask to prepare journal entries in the books of hire purchaser and sometimes they will ask journal entries in the books of hire seller. So you have to know who is hire purchaser and who is hire seller. Next, they have purchased how much car? 4 motor car. What is the cost of each car? 2,75,000. Now, what is the cash price of car? So, what is the total cash price of the car? So, that is, they have purchased 2,75,000 worth car. How much car they have purchased? 4 cars. So, in the sense, the total cash price is how much? Rupees 11 lakh. So, the cash price is how much? 11 lakh. So, this is the total cash price of the car. Now, let us see what they have made an agreement. So, on 1/1/2008 on hire purchase system. So, they have purchased on which date? On 1/1/2008. So, you have to be careful with the date also because under hire purchase system, the rest of the payment will be made in the form of installment. So, you have to know the date also. Now, let us see what are the terms. payment on delivery rupees 1 lakh. Now what they have done? They had to pay rupees 11 lakh, out of which on the date of delivery they made a down payment. Now what is this 1 lakh? It's a down payment. So they had to pay 11 lakh, and they have paid how much? 1 lakh as down payment. So remaining 10 lakh they have to pay in the form of installments. Now clear? So on the payment on delivery rupees 1 lakh and the balance in 4 equal installment. So here this 10 lakh. So how much they have to pay? They had to pay 11 lakh. On the delivery they have paid 1 lakh. So the remaining 10 lakh has to be paid in 4 installments. So it has been 4 installments. So it has been paid with 4 installments. So when you divide by 10 lakh, divide by 4, how much you'll get? 10 lakh divided by 4. So you'll get 2,50,000. So each year they have to pay 2,50,000. So this is the principal amount. So what is this? 2,50,000 is principal amount. Along with that, they have to pay interest also. Let us see what is the interest. So in 4 equal installment together with interest at 8% per annum. So interest is how much? 8% per annum. So 2,50,000 plus interest is installment. So 2,50,000 is just principal amount. So principal plus interest is installment to be paid at the end of each year. So for 4 years they have to pay this installment amount. Next what they have told, Durga Travels Limited, rate of depreciation at 10%. So here the hire purchaser has to charge depreciation on that particular asset. So what is the percentage of depreciation? 10% on written down value method. So there are 2 methods to calculate depreciation. One is straight line method and the other one is written down value method. Under straight line method, the depreciation will be same year after year. Whereas in written down value method, it keeps on decreasing. So it keeps on, here the depreciation goes on decreasing under written down value method. No, so we have to calculate depreciation at 10% per annum. Accounts are to be closed on 31st December every year. So when we have to make the payment at the end of each year, that is on 31st December every year, prepare journal entries in the books of Durga Travels. So we have to prepare journal entries in the books of Durga Travels, that is in the books of hire purchaser. Now it's very easy. I think you know the journal entries. Now we have to draw a table. So if you draw this table, everything is there in this table itself. Only thing is that you have to pick the amount and record in the journal entries. So now for this calculation, you have to draw this table. So this is also very important. So if you draw this table, you can directly pick the amount and write in the journal entries. Now your heading is calculation of principal, interest, installment and depreciation. So we are going to calculate all these in one particular table. Now, so your format will be like this: date, particulars, amount, principal, interest, installment and depreciation. So this is a format where you are going to calculate all these: interest, principal, installment as well as depreciation. Now first year. Now let us see when they have purchased the asset on 1/1/2008. So this table contains all the information. Okay. So the asset is being purchased on 1/1/2008. Write the date 1/1/2008. Now in your particular column, write what is the cash price, total cash price of the asset. So we have calculated, right? So they have purchased 2,75,000 worth 4 cars. So 2,75,000 into 4. So your cash price will be 2,75,000 into 4. We have purchased 4 cars, right? So total amount is how much? 11 lakh. So when you multiply 2,75,000 into 4, you will get 11 lakh. So here the car worth 11 lakh has been purchased. Now on the date of receiving that car, so here hire purchaser have made some payment, which is known as what? Down payment. So less down payment. So how much down payment is made? So they have paid 1 lakh. So minus 1 lakh. 11 lakh minus 1 lakh. So total amount payable is how much? 10 lakh. So the total amount that has to be paid by the higher purchaser to higher seller in the form of installment is how much? 10 lakh. Now, this much they have given in the question. Okay. Now go through the first installment. When did they tell? So the installment is paid. This 10 lakh has to be paid in 4 equal installment at the end of each year. That is on 31st December each year. Now we have purchased the asset on 2008. End of 2008 is how much? 31st 12 2008. That is 31st December 2008. We are going to make our first installment. Now let us see our first installment. So this 10 lakh has to be divided into 4 equal installments, right? So 10 lakh divided by 4. So each installment, so how much it will get? 2,50,000. So each installment should contain 2,50,000 plus interest. So here, let us see here. Now, don't minus this 2,50,000 first. Now see here, first principal amount is how much? 2,50,000. Because in each installment, we have to pay 2,50,000. So principal amount is 2,50,000 plus interest. So here, 2,50,000 plus interest, then we will get installment. So this 2,50,000 is not installment because we have to add interest for that, then only it will become installment. Now, we know what is the principal amount? 2,50,000 plus interest. So the amount payable how much? 10 lakh. So 1 lakh, the total value is 11 lakh, but 1 lakh we have already paid in the form of down payment. Remaining amount is how much? 10 lakh. Then what is the percentage of interest? That is 8%. So here interest has to be calculated at 8%. So 10 lakh is the amount payable into 8%. So we'll get 80,000. Okay. Now what is the installment? Principal plus interest is equal to installment. So is equal to how much? 3,30,000. So first installment amount is how much? 3,30,000. Hope you have got how you have to calculate. So first, we know what is the amount payable 10 lakh. Divide that 10 lakh into number of installment. In this question, it is 4 equal installment. When you divide, you will get 2,50,000. So that 2,50,000 is not installment amount. It is just principal amount. So for that principal amount, we have to calculate interest. So principal amount is 2,50,000. Interest. So from amount payable into 8%, so we'll get interest 80,000. Add principal amount plus interest, we'll get installment amount, that is 3,30,000. Now coming to the second installment that has to be paid in 2009. So we had already paid the first installment in 2008. Next installment in 2009, that is second installment. Now what you have to do? The amount payable was 10 lakh minus we have already paid the first principal amount. So deduct this principal amount, not installment amount. We have to deduct the principal amount. So minus 2,50,000. So we'll get 7,50,000. That is second year we are having 7,50,000 to be paid to the higher seller. Now we know our principal amount 2,50,000 because in each equal installment we are going to pay. So second year principal amount is also 2,50,000. Plus interest. Now how to calculate interest? So the amount payable in the second year is how much? 7,50,000. 7,50,000 into 8%. So we'll get 60,000. Now we have to calculate second year installment, that is principal plus interest. So we'll get second year installment, that is 2,50,000 plus 60,000. So we'll get 3,10,000. Hope you are clear with the second year. Now come to the third year. So the third year is payable on 31st 12 2010. Next, this is third installment. Now what you have to do? So we have to minus this. That is for third year, what is the amount remaining? For second year, it was amount payable was 7,50,000 minus we have paid 2,50,000, right? So 7,50,000 minus this. So minus this 2,50,000. So we'll get 5 lakh. So in the third year, the amount payable is 5 lakh. Now let us see what is the principal amount. Principal amount remains same, 2,50,000. What is the interest? That is, amount payable is 5 lakh into 8% interest. So we'll get 40,000. Add this, 2,50,000 plus 40,000 will get the third year installment amount. In the same way for fourth year, so fourth year is on 31st/12/2011, fourth installment. Now what you have to do, the amount payable in the third year was 5 lakh and we have paid this 2,50,000. So what you have to do, 5 lakh minus 2,50,000. So we'll get how much? 2,50,000. So the amount payable in the fourth year is how much? 2,50,000. And the principal remains same, 2,50,000. And so how to calculate interest? Amount payable is 2,50,000 into 8%. So how much you'll get? 20,000. Now how to calculate the installment amount? 2,50,000 plus 20,000. So you'll get 2,70,000. So in the fourth year, we have already paid 2,50,000. So your next year will be 0 because we have already paid all the principal amount in the equal installment. So this is about, so this table is all about calculation of interest, principal as well as installment. Now we shall calculate the depreciation. Now how to calculate the depreciation? So depreciation has to be calculated in written down value method. So depreciation has to be calculated in the written down value method. And what is the percentage of depreciation? They have given 10%. So here 10% depreciation has to be calculated. So my dear students, first calculate this much till installment, then later you calculate the depreciation. Now how to calculate the depreciation? What is the total value of asset? That is 11 lakh. That is, we have to take the actual price. Why? Because upon that price we are going to calculate the depreciation. It's not that after deducting the down payment. So before deducting the down payment, what is the actual price of the asset? On that price we are going to calculate the depreciation. Now what is the percentage of depreciation for first year? The value of asset is 11 lakh. That is, value of motor car is 11 lakh into percentage. Percentage is 10%. So how much you'll get? 1,10,000. 11 lakh into 10%, you will get 1,10,000. Now for the second year, how to calculate depreciation? 11 lakh minus 1,10,000. So the remaining amount is how much? 9,90,000. So upon that amount, we have to calculate depreciation for second year. So 9,90,000 into 10% will get 99,000. So second year depreciation is how much? 99,000. Why we are calculating depreciation on the deducted amount? Because we are following written down value method. If it was straight line method, then we are going to calculate, or the depreciation will remain same for all the year. It is 11 lakh into 10%. So we'll get 1,10,000. So that depreciation will be same for all the year. But here in this situation, we are going to calculate depreciation on written down value method. So it goes on decreasing. Now for second year, we got the depreciation 99,000. For third year, how to calculate? 9,90,000 minus 99,000. So we'll get how much? 8,91,000 into 10% depreciation. How much you'll get? 89,100. So this is third year depreciation. Now fourth year depreciation, minus 8,91,000 minus 89,100. So we'll get 8,01,900 into 10%. So the depreciation is how much? 80,190. Hope you are clear with all the 4 years interest, all the 4 years installment, as well as all the 4 years depreciation. Now go through the journal entry. That is journal entry in the books of hire purchaser. So the entry will be same. Only thing is that you have to pick the amount from here and post the entry in the journal entries. Now, journal entries in the books of Durga Travels Limited. Now, we are going to prepare. Who is Durga Travels? He is the hire purchaser. That is, he is the hire purchaser. So, we are going to prepare or record the journal entry in the books of hire purchaser. So here they have clearly given the name of hire purchaser, that is Durga Travels Limited. So hope you know the format. You will be having date, particulars, ledger folio, debit and credit, right? Now, what is the first entry for receiving the asset, right? So what is the asset here? That is motor car. Then the date is from 1/1/2008. On the date of purchase of asset. Now see the date of purchase of asset. So they have purchased the asset on 1/1/08. So what is the asset? Motor car. So motor car account data to hire seller account. Now who is the hire seller here? Tata Company Limited account. So asset is, so your entry is asset account data to hire seller account. Your asset is motor car. To hire seller is who? Tata Company Limited. So motor car account data to Tata Company Limited account being asset purchased on hire purchase system. Now what is the actual value of asset? It is 11 lakh. So write this 11 lakh. Clear? Now what is the second entry? For down payment, for making down payment. So here they have made a down payment of how much? That is 1 lakh. So what is the entry? Who is receiving that amount? Hire seller, right? So who is the hire seller here? Tata Company Limited account to bank account. So why we are crediting bank account? Because cash or bank goes out from hire purchaser, right? So Tata Company Limited account data to bank account being the down payment made. So this is made on the same date on which the asset has been received, that is on 1/1/2008. So hire seller, that is Tata Company Limited account data to bank account. So how much they have made the down payment? 1 lakh, right? So they have made the down payment 1 lakh. Next, what you have to do? Now we are done with the date on which they have received the asset. Now come to the end of the financial year, that is end of the financial year 31/12/2008. So what is the entry? First you have to record for interest due, next installment paid, depreciation charged, then transfer interest and depreciation to profit and loss account. Now your entry is for interest due. So what is the entry? Interest account data to hire seller account. Now who is the hire seller here? Tata Company Limited. So interest account data to Tata Company Limited account being the first year interest due. Now go through your table here. So now the table helps. So how much is the interest due? Interest due in the first installment. How much? 80,000. So record that amount 80,000. Now clear? Yes. Next, your entry is for installment paid. So what is the entry? At the end of the year 31/12/2008, you have to pay the installment. So what is the entry? Hire seller account data, that is Tata Company Limited account data to bank account. So what is the narration? Being the first year installment paid. Clear? Now what is the installment in the first year? Yes, here it is 3,30,000. So record that amount 3,30,000 both the side. It is debit side and credit side. Next, for depreciation charge, that is at the end of the first year, that is 31/12/2008, depreciation account data to motor car account, that is depreciation account data to asset account. So here asset is motor car being depreciation charge. Now go through the table once again. So what is the first year depreciation? How much? 1,10,000. So record that amount 1,10,000. What is the last entry in the first year? That is 31/12/2008. You have to transfer this interest and depreciation to profit and loss account. So what is the entry? Profit and loss account data to interest account to depreciation account being interest and depreciation transferred to profit and loss account. Now what is the interest? Don't write this amount first. Now what is the interest? Now here interest is how much? How much we have recorded? 80,000. So 80,000 is the interest. And what is the depreciation? 1,10,000. So in interest column write 80,000 and write 1,10,000 in the credit column. Next add this 80,000 plus 1,10,000, you will get 1,90,000. Now we are done with the first year. So there are 4 installments, right? Now come to the second year. So in second year, we are not going to record entry for purchase of asset as well as down payment. We shall start with interest due. So here we have to record 4 entries for interest due, installment paid, depreciation charge and transfer of interest and depreciation to profit and loss account. Your entry remains same. Now come to the second year. That is for interest due. So second year. So first year is 2008. Second year is 2009. So end of second year 31st/12/2009 for interest due, interest account data to hire seller account. Your entry remains same. That is Tata Company Limited account being the second year interest due. Now go through the table. So what is the second year interest? That is 60,000. So write that 60,000. So 60,000 each. Next for installment paid. On the same day, that is end of the second year, Tata Company Limited account data to bank account being second year installment paid. Now what is the installment for second year? So second year how much? 3,10,000. So write that amount. 3,10,000. Clear? Now next entry is for depreciation charge. That is end of the second year. Depreciation account data to motor car account being depreciation charge. Now go through the table and see what is the depreciation for second year. So second year depreciation is how much? 99,000. So record that depreciation 99,000. And your last entry in the second year is what? Transfer interest and depreciation to profit and loss account. So entry will be profit and loss account data to interest account to depreciation account. So what was the interest? That is 60,000. That is in the second year. Interest is 60,000 and the depreciation was 99,000. So write 60,000 and 90,000, add these two and write 1,59,000. Clear about second year? In the same way, continue with the third year. So here also it starts from interest due. So your third year is what? 2010. And the third year is also, your entry remains same. First it will start with interest due. So interest account data to Tata Company Limited account. Now see the table and see what is the interest due in third installment. So interest due is how much? 40,000. So write that amount. So third year is how much? 40,000 interest due. Next installment paid. So what is the entry at the end of third year? That is 31st/12/2010. So installment paid. Tata Company Limited account data to bank account being third year installment paid. Now go through the table. What is third year installment? Third year installment is 2,90,000. So write that 2,90,000. Now clear? Next is for depreciation. That is at the end of third year, 31st/12/2010, depreciation account data to asset account, that is motor car account being depreciation charge. Now go to the third year, go through the table and see what is the depreciation in the third year. So third year depreciation is how much? 89,100. So charge or write that depreciation 89,100. Now what is the last entry? Transfer interest and depreciation of that third year to profit and loss account at the end of the year, that is 31st/12/2010. Profit and loss account data to interest account to depreciation account. So what is the interest of third year? 40,000. What is depreciation? 89,100. So 40,000, 89,100, add these two and transfer to profit and loss account. In the same way for fourth year, so here there are 4 installments. Your fourth year will be 2011. Okay. So at the end of the year, interest due, installment paid, depreciation charge, transfer interest and depreciation to profit and loss account. Now fourth year at the end, that is 31st/12/2011, interest due, interest account data to hire seller, that is Tata Company Limited account being fourth year interest due. Now see what is the fourth year interest. So fourth year interest is how much? 20,000. So write that 20,000. 20,000. Next fourth year installment paid. So what is the entry? Tata Company Limited account data to bank account being fourth year installment paid. Now go through the fourth year installment. So what is fourth year installment? That is 2,70,000. So write 2,70,000. Next, for charging depreciation, that is the end of 4th year, 31st/12/2011, depreciation account data to Tata Motors account being depreciation charge. See what is 4th year depreciation. So depreciation is 80,190. So write that. 80,190. And a last transaction is transfer interest and depreciation to profit and loss account. So at the end of the year, that is 31st/12/2011. So what is the entry? Profit and loss account data to interest account to depreciation account. So what was the interest in the 4th year? That is 20,000 plus what was the depreciation? 80,190. So 20,000 and 80,190. So total you will get 1,190,000. So this is how you are going to record journal entries in the books of hire purchaser. So my dear students, remember in your first year you will be having 6 entries. One is for asset purchased, next down payment, next interest due, and the 4th entry is for installment paid, 5th entry for depreciation, and 6th entry is for transferring interest and depreciation to profit and loss account. Rest all the year you will be having only 4 entry. It starts from interest due, then installment paid, next depreciation charge, and transfer depreciation and interest to profit and loss account. So your format remains same. Once you know the journal entry, and you have to be clear with recording the amount in that particular table. So that table plays a very important role. So you have to see while calculating. After that, you can directly write the amount in your journal entries. So in my next session, I am going to discuss on journal entry in the books of hire purchaser. So we shall go through one more problem and ledger accounts in the books of hire purchaser. So we have solved a problem today that is relating to journal entries in the books of hire purchaser. So in my next session, we shall solve a problem where we shall have both journal entries and ledger account in one problem. So normally they will not ask both in one problem, that is journal entry as well as ledger account. So in order to understand properly, first we shall go through journal entries, next we shall go through ledger accounts. So my dear students, hope you all understood the session. See you all in my next session. Till then, take care. Thank you.